Mr. Brijesh of IDBI Capital Markets. Thank you for joining us here on News 9, Brijesh. Good recovery, this week for Nifty after that 2 weeks of lull where we lost about 1% or so. 22,000, seems to be in touching distance. Can we make a move to all-time high levels within the next week or so?
Good morning, Suyash. So mainly today the Nifty is up. The index is up by close to 238 points. So 22,000 is the immediate resistance. That is mainly because of the derivatives data where there's a lot of call writing is seen at 22,000 level. So slowly the structure is changing. Eventually, for the last couple of weeks, we believe that there will always be a pullback, and we wanted that pullback to be viewed as a exit opportunity. But then slowly the data are changing. Bank Nifty for the very first time has now in yesterday's session closed over 46,000 level. So there will be a short covering in the Bank Nifty. So I think the Bank Nifty is heading towards 48,000 level. So by chance, for example, if Bank Nifty heads towards 48,000 level, then we should be heading towards 22,200, somewhere close to those points. But what if we see those points? I won't be much aggressive on this market. Post budget, there has been a rally. There is a high probability this may act as a trap because if you look at the index, FI index data, they are still on this short positions. They are still short by close to 80,000 contract on the index future. So I'm not too much of positive on the market. I will be extremely cautious and would take the stock specific trades because I largely I believe this closer to 22,000, 22,100. There will be some profit booking will come in the market. But having said this, the entire thing, the corrections or maybe the things will change when 21,500 will be broken. So I will maintain my positive bias as long as 21,500 is held. Maybe next week or whenever this 21,500 is broken, I think the trend and momentum both will turn negative. Till that time, I think it's a positive. It would be sideways to positive market, but cautious close to 22,000, 22,100 level.
All right, and speaking of Nifty Bank, that is showing quite a bit of resilience this week. For the week, we have been talking about, first of all, Nifty Bank being the laggard for the past many months. But this week overall the index is up somewhere around the 3% mark. In fact, I was looking at that entire fall from record high levels to the recent low which it had hit on 25th January, and we have retraced about 50% of what was lost. And above the crucial resistance zone, as you had also put out, around that 46,500 mark, and it's being driven by the PSU banking stocks. And one particular stock I wanted to talk about was Canara Bank. That has been doing phenomenally well. It's up about 10% or so in the past five sessions. What's your view there, Canara Bank? Can this rally continue? We are already at at record levels. Can we see further upside from here on?
I believe Canara Bank has been one of the outperformer in the PSU bank, and that this current level 514 is slightly in an overbought zone from the technical perspective. So maybe whenever it comes back to 500, 490, definitely it remains a buying opportunity because from the fundamental point of view, I think it is going to perform much better from this price. So 600 plus level in the near term, maybe we'll talk of another 3-4 months kind of a time frame. It should be that levels are visible. So definitely, I think from the long term perspective or medium to long term perspective, Canara Bank will remain a very strong positive bet. From the technical perspective, we'll wait for small mild correction somewhere close to 500 mark or 490 mark. So whenever we see those levels, I think one should again re-enter the long positions in the Canara Bank.
Good morning, Mr. Ail. I'll drive your attention to Adani Ports, which announced their Q3 results yesterday. 68% growth in consolidated net profits, almost 45% growth in revenues. During the quarter, the company achieved its highest ever quarterly, cargo volume at 108.6 million metric tons. Mudra, its flagship port, recorded the highest ever monthly volume of any port since October 2023. The company said its domestic cargo growth has grown at 2.5%, the growth rate of India. Uh, uh, all its 9 domestic ports have recorded their highest ever cargo volumes. Rail volumes growth grew 17% year on year to 157,904 20-foot equivalent unit cargoes. So basically positives everywhere. If I look at the stock, in the last 1 year, Adani Ports has gone up 177%. Last 1 month, 91%. What do you make of Adani Ports? Has it peaked, or is it still time to invest into this stock?
Sir, as you said, the Adani has been performing from the last 3 months. If you see from the levels of 850, now we are at almost close to 1300 levels. So from the technical perspective, we are in the overbought zone. But then what I can see from the option perspective is like there are no shorts being seen in the Adani port. So at least for the month of Feb. So everywhere at every strike price there has been a long build up, and this long build up has went till 1380 level. So I think at least since this is again the FNO stock and too many people would be taking the derivatives position. So and technically I won't be able to exactly tell you how much it can be go. But then if I do look from the derivatives option chain and the option data, 1380 is a strike price. There's an aggressive buying which has been seen. So I won't be surprised if we see during the entire month, if we see another 100 points from the current level. So I believe Adani can go to 1350, 1380 during this next couple of days. So by any chance, if there is a correction, because the trend from the weekly and monthly time frame is extremely positive. So I won't mind betting 1380 levels on the Adani port, at least for the Feb series.
That, I think, is the big story, has been the big story for the last couple of days. It's down another 20%. And it seems that the management has failed to soothe investor concerns after the recent RBI restrictions. From a retail investor standpoint, what should be the move as far as Paytm is concerned? Should we just sit on the sideline and wait for the dust to settle, or maybe use these dips to buy into the stock? Because at the end of the day, they still have time till 29th of Feb, and they are, it seems, working with other commercial banks to keep their operations going on.
Suyash, I think there is definitely a disappointment. So the way 20% 2 days, we are seeing today again 20% kind of a circuit. So I think we need to cautious. I would definitely not recommend buying Paytm at this point. Maybe somehow we are not convinced from the fundamental point of view also. So no buy trade setups in the Paytm at current juncture. Maybe any pullback. By any chance we see a pullback close to this the falling level 700 mark from where the fall started. If we go get those opportunity, I would be taking an exit in the Paytm maybe after 6 months or maybe after a year and so. We may review this call, but then definitely no fresh buying in Paytms. Don't use this opportunity to go long even from the trading point of view, because I don't know, it may also go below 100 level is what we sense over the next days. So we'll not take any buy positions, and by any chance we see a pullback, and which may come because of this extreme fall. So we will be having an exit view on the Paytm.
All right, the stock could fall to another to 100 levels. Now that's a big one, because I was reading some of the price targets. Jeffries, I think, has the lowest price target currently at 500. Yours is at 100. That's a significant significantly less than what Jeffries has put it out there. But moving on, India's leading car makers, now they reported their best ever monthly sales in the local market, and the volumes have grown by about cumulatively by 13% to over 3,94,000 units in January, as dealers filled inventories that were depleted during the year-end sales. Now, Tata Motors, I'll start with that. The sales figures are they have seen a 12% growth over in the passenger vehicle segment. That has grown to about 53,633 units. Electric passenger vehicle sales, that rose by a whopping 69% on a year-on-year basis to 6,979 units. The commercial vehicle segment, however, the sales were subdued. Market leader, Tata Motors reported a 2% decline as far as the total, commercial vehicle sales are concerned for the month of January to 32,092 units. Heavy commercial vehicles sales, now that fell about 11% on a year-on-year basis to 8,906 units. But Maruti and Mahindra also reported their numbers.
Yeah, so like you spoke about Tata Motors, they had stress in their commercial vehicles. Maruti had a little bit of stress when it came to passenger vehicles. That was a decline, but again, whether it's domestic sales or export sales, it has grown by huge numbers. Even Mahindra and Mahindra, 15% year-on-year rise in the number of units of cars sold, vehicles sold. But looking at the stocks, there seems to be something that Tata Motors is doing right much more than Maruti and Mahindra. When I look at the stock of Tata Motors in the last 1 year, it has jumped almost 100%, while Maruti in the same time 19%, Mahindra and Mahindra 23%. Brijesh, if you are still there, what do you make of the auto stocks here? What is it that Tata Motors is doing right that Maruti and Mahindra are not? Huge difference between the jump in the stocks.
Okay, so let me tell you this. Tata Motor was one of the underperformer for so many years. It never performed. Like from the level of 350, it went up to 600, and then that zone of 600 was the multiple resistance zone. And in the month of June 23, so we saw a very good breakout from those zones. And if I put it from the technical perspective, that entire range when the market Tata Motor was not moving, it was forming a bullish inverse head and shoulder pattern, which is normally a bullish pattern, and that talks of 1250 level on the higher side. That's a directional positional view, and we have a very strong bet on the Tata Motors, and we are looking towards 1250 plus levels, or maybe close to 1250, 1200 levels. So that momentum will be there maybe for next few quarters. This remains a buying opportunity. Technically, it is slightly in the overbought zone. Some mild corrections can be there, 50, 60 odd points. I think one should take that as a buying opportunity. Directionally, if somebody wants to hold a position, then I believe 1250 is what would be the reasonable upside for the Tata Motors. So definitely, that is one of the outperformer, and it will keep outperforming in the next coming months. So extremely bullish on Tata Motors.
And is it time to get into something like a Mahindra, which is low right now? So good time to buy, or just wait and watch on that? Even Maruti.
Yeah, M&M specific, I think we can have a buy because there is nothing which says there can be some correction or some sort of that. Auto as a sector, we do like auto sector. If the Nifty or overall the market has to perform, auto will be the one space after the banking, which should contribute to this rally. So M&M is looking good. We can bet for right now. I will betting more on a trading opportunity, maybe close to 1750 can be the maximum trading opportunity that I would be looking M&M. Specifically for the Maruti, I would be slightly cautious. If you see the rally, what we saw in last 2 working days, there has been a very strong rally, and this level of 10,750, 10,800 is a resistance zone for the Maruti. So Maruti, I would skip. Maybe that momentum can be there, but then if I need to go long, Tata Motors and M&M are the 2 bets which I'm willing to take at the current price.
All right, and Brijesh, before we let you go, where else do you see trading opportunities in the short term, sir?
So actually, from the auto space, there are 2 picks. One is from the mid cap, that is Jamna Auto. We are seeing from the positional point of view, I think there is a good amount of volume and accumulation has been seen in Jamna Auto. I think Jamna Auto can see 140, 145 levels in the coming days. So that can one positional bet. And from the auto space, again, 170 Ashok Leyland is something which we are keeping a watch. So this is more of a derivatives trade because in Ashok Leyland at 175 there is a lot of call writing, and in the last 3 days this call writing has the positions are getting unwinded. So that gives me a sense that maybe today, tomorrow, maybe the next week, this level will be taken out. And once 175 is taken out, then I am pretty confident we will be seeing 190 on the higher side. This is a FNO trade, so its a lot size is also quite a big. So the good amount of money can be made in Ashok Leyland. So that is one on my watch list. And lastly, the Indigo. Indigo has again picked up the momentum yesterday, day before yesterday. There was a good buying we have seen. So any small correction or even at the current market price, I think one should take the long position in the Indigo. 30 to 50 would be the target for the Indigo.
All right, those are the top stock picks for the short term from Mr. Brijesh Iyer, sir. Thank you for joining us here on News 9. Always great insights from you, sir.